we're talking about this, a throwaway line that I saw on a Realty Track report, which is in 2014, the FHA guidelines dropped. So they saw a spike in foreclosure, in default activity from 2014 FHA loans. What's up with FHA? Should I worry about FHA being the new time bomb, or is it still the last good place to get a 3% loan? Is it viable in California these days? I'd like your feedback on it.
Like I said, after 2009, the guidelines all changed. Like, you couldn't be alive and breathing and get a loan. In order to get a loan, you actually had to qualify. If you were a self-employed borrower, they were looking at your corporate tax returns if you were incorporated, and they were looking at your adjusted gross income and how much money you were paying to the IRS based on your profits and your income minus your expenses. So self-employed borrowers, if you're qualifying for an FHA loan, the FHA allows you to go up to a 55% debt to income ratio. Sometimes they go above the 55%, where conventional is 45% on a cash out refi and 50% on a purchase loan. So we're talking debt to income ratios, but you actually have to qualify. So they're looking at everything extremely closely. This 2014 numbers with the FHA that you're referring to, they fall under the new guidelines. So that leads me to believe that if there's an update, a greater default rate, that was because the mortgage insurance premium was higher back in 2014. They have since dropped it, the mortgage insurance premium. So there's two mortgage insurance premiums with FHA loans. You have what's called an upfront mortgage insurance premium, which is 1.75%, which you can get. A lot of people add that to the loan balance, or with us at Solomon Financial, because we do zero cost loans, we are able to get a high enough rebate to be able to cover that upfront mortgage insurance premium so it doesn't get added to your loan balance. Okay, so you have, and that's a one-time charge. It's an upfront mortgage insurance premium of 1.75. Then you have a monthly mortgage insurance. It used to be like 1.2 or 1.15 in that range. Now they dropped it down to 0.8. So they dropped it 40 basis points. So on a $300,000 mortgage, 0.8 would be $2,400 a year. Divided by 12 months, we're talking $200 a month. Whereas before, it was at, let's say, 1.15 or something like that. It would have been like $3,500 a year. So basically, they dropped it about $1,100 a year on a $300,000 loan. And I'm doing all these numbers in my head, and I think I'm pretty close.
I'm sure you probably are. I would believe you.
Yeah. Well, I'm. My wife calls me a human calculator, so I've always been pretty good with math and numbers and stuff. But,
and I'm the banker, and I'm horrible with numbers. Go figure.
Well, it doesn't matter. You were the one that were making important decisions in people's lives.
Not for a positive tomorrow. You're actually making people happy, and that's what's most important.
Well, you have to care. You have to care. And if you care, then, I tell people I'm not a doctor. I don't save people's lives. All those people that got shot in Las Vegas, think about those hospitals and the chaos when there's 500 victims that got shot and they're all coming to your hospital in the back of pickup trucks. However the heck they got to the hospital, but they're just literally, so think about the staff and all the craziness in those hospitals when all those people got shot. It's crazy what, they were probably sleepless for 30 hours, staying up all day, trying to save people's lives. And I say, I'm not a doctor. I don't save people's lives, but I do the next best thing, and I help save their homes from foreclosure thanks to the monster marketing program that you have. And then the next best thing I do is I help them save money by making smart financial decisions. And I'm able to offer that type of help to help people make smart financial decisions when they're looking to buy or refinance.
So are we going to continue to see 2015, 2016 delinquency rates on FHA? Are they just going to be questionable buyers?
You know, I never answered your question. I'm really good at just bouncing around and not answering
it's okay.
the question.
That's my job.
Yeah.
I keep track, which is really funny that I'm the one in charge of keeping track.
Yeah, we're both, straight shooters, and we just
we are way
call
ADD.
It like
way ADD.
I think I have the same issue as well. But the answer to your question is the only reason people are not going to be able to make their payments on their FHA or conventional loans is because of the fact that people lose their jobs. And the economy has been gaining jobs for like 60 months in a row. We're like an averaging, 150,000 jobs created per month, which is a healthy number. The unemployment rate is way down. And so I really believe that the reason why people are defaulting is not because of anything except of losing their job. Think about what happened in Houston. How many homes were lost in Houston? They have an incredibly high delinquency rate right now. I think it's last I heard it was at 80% delinquency.
Yeah, it's crazy.
But that's because of a national disaster. So I really believe that the only reason that people are not making their payments on time with FHA is because they don't have the money. And so many Americans live paycheck to paycheck. And then if one of the people in the household lose a job, even if they are looking for another job, even that 60 or 90 day window that it takes them to find another job of the same, pay scale, I think because they're paycheck to paycheck and they only put 3.5% down when they bought the house, I think that's what's causing them to go into delinquency, and it's nothing more than that. It's just that they don't have the money saved up. And home ownership, when the water heater goes out, you got to buy a new water heater. It's different from renting.
That's an interesting take. I would have never put the perspective on jobs as compared to guidelines. So you're saying that the guidelines are still solid enough that they're maintaining the quality of the individuals?
Oh, yeah. Yeah. In order to get a loan today, you got to walk on water. If they want to know if you have a deposit more than $500 in your bank account and it's not a paycheck, they want to know, thanks to Obama, they want to know where that money came from. Is it drug money? Is it mattress money? Where did that money come from? If there's a withdrawal in your bank account more than $500, they want to know what it's for. They ask. The lenders ask. They need letters of explanation. It is ridiculous what we have to do. And we do zero-cost loans, so every time the rates drop, we call our clients back and say, hey, guess what, Maria? The rate's 0.5% lower. I know you just got a loan with us in January of this year, but now we can get you 0.5 point lower. And there, what I hear? And I never used to hear this. Fred, I really appreciate the offer, but I am done with refinancing. The government can keep their blank money because it was a hassle to go through the process. And there are people that will still go through the hassle in order to save $100 a month. But, there's a larger percentage of people now where I would say about, if I call up 100 customers, 80 of them would do it and 20 of them would say no thanks, even though they know they could save money. Just because it's a hassle and you have to qualify. You literally have to qualify. It is for real. Ever since 2009, it is for real now. You literally have to qualify. So
That's a crazy thought that they're actually keeping it that tight, but they're seeing a spike. So you're thinking it's based on income. Is FHA viable in Southern California these days?
well, yeah, it is. It because you can, I mean, you can buy up to a $659,000 property with 3.5% down, which puts you at the max limit of 636,150. So yes, but with the multiple offers situation and the buyers sometimes having to go direct to the listing agents in order to get their offers accepted because these agents are looking to double end the deal. It's just a tough market right now for buyers.
So what's your advice right now for realtors? Is it about working with buyers? Is it trying to find financing? I mean, what's your perspective?
Well, we've known each other for 10 years, Lee, right?
Yes, we have.
And I over the last 3 weeks, I have started doing the monster because I think I own a mortgage and real estate company. I think where the business is right now is listings and loans. Purchase loans and listings. That's where you're going to make your money today. So I'm out there tagging properties, just like all your monster students. I'm paying someone to go tag the properties. And we're out there tagging these properties, and we are looking for people that need to sell. And they don't want to sell, but they need to sell, especially the ones that have equity. And out here in Palm Springs, I'm finding I'm working with 3 buyers right now. They all have equity. One has 400, one has 280. Another lady that I just spoke to, Tuesday I think it was, she had 120,000 worth of equity. That's where the business is. It's in listings right now. Buyers, there's hundreds of them. But if you are a buyer, here's what I suggest: start writing offers right after Thanksgiving and right before the Super Bowl, because I think that's where you're going to have your best chance of getting your offer accepted. Right after Thanksgiving and right before the Super Bowl, and is as close as you can to Christmas Day, you write that offer, because that's when the least amount of people are going to be looking at homes. So submit your offers on December 26th or December 24th. If you're really crazy, submit it on Christmas Day. But I think you have a better chance to get your offer accepted at or around those times.
And again, how should everybody reach you, Fred?
I can be reached at 714-403-7334. That's my business cell phone. My office hours are 8:15 a.m. to 7:30 p.m. Monday through Friday. I know this is, on the internet, so that would be Pacific Standard Time here in California. And you can send me a text message on that 714-403-7334. You can reach me via email, Fred at nopoints with an S, no closing costs with an S.com, Fred at nopoints.noclosingcosts.com. Or just Google Solomon Financial Mortgage in Newport Beach.
Perfect. Again, that's Fred Solomon. He will help all of you real estate agents across the country get your buyers prepared and financed. He's also happy to give you advice, believe it or not. You are a consultant to many real estate agents. You are a mentor. I don't think you talk enough about your mentoring and tutelage of other real estate professionals. Fred, why do you care so much? And I don't want to sound like a jerk on the topic, but why?
Well, there's enough business to go around, Lee. Like, you asked me why I wasn't doing my Solomon Free Money Hour. It was simply because I've been working so much and I needed to get caught up. I've gotten really good at marketing. I've listened to people like you. I've put my action and I implemented it. I teach realtors how to make their phone ring, how to get the highest quality lead for the lowest price. And the reason why I do that is because I know I'm going to get referral business. If I help a realtor get a new phone call because of an idea that I gave them and that they implemented, and I pretty much make it a step-by-step easy process for them, Like, for example, I